what you've got is a wasting asset, which is essentially useless. People say that gold is a good inflation hedge, but...
Is gold a good investment? It's recently hit its highest price in real terms since the 1980s. But is it actually worth it? Ramin Nakisa is host of Pensioncraft and a friend of the podcast. Born in the hearts of stars, cast into the universe, carried here on asteroids, put in the ground, we dig it up, we form it into bars and then we stick it back underground. We go, look, it's worth money. It's pretty crazy.
So I never pay any attention to the narrative. I just look at the numbers.
Do you think that we could see a crash then in the gold price?
Oh yeah, I mean, it's unbelievably crashy.
We're going to have a conversation about gold today. I want to talk about Tremaine's gold first of all. Yeah. Can we go through everything you've got on you that's gold?
That's a lot. Let's start with the chain. Ramin, you're wondering what this chain is, I'm sure.
Yeah, I just didn't recognise the figure on the front of it.
The name is Jesus, our Lord and Saviour.
Are you sure?
Right, I'm sure. Do you want to take a look?
The Jesus piece is like a classic, right?
It is a classic.
It's always that style of Jesus.
So you see the crown of thorns there with the diamonds in it? He's got diamonds in his eyes.
Yeah.
I actually got it from Jerusalem.
Really?
And it's pretty light.
Behave. You're such a melt. The chain is, since you're asking, the chain is 18 karat gold, and the this one I think is 18 as well. I can't see the hallmark, it's so small. What does 920 mean? Yeah, I think it's 20 karat. And then the chain is 18. Then I got the ring, which is 20 karat. It's got
signet. Is it signet?
It's not a signet ring, it's got a cross on it because I'm Catholic. That's 20 karat gold. But I also like the colour gold. So I also have a gold money clip.
You bought that today.
Of course I did. We're talking about gold, so I got to make sure I got all the stuff. Oops, that's my keys. You got to have the gold. I actually found this in a taxi.
Did you?
Yeah, I know. It's like, it's just attractive. Yves Saint Laurent. I don't think
you
it's...
got £50 notes. You never carry this much cash. You're so full of
something
it.
Light, you know.
You put that on, you weren't putting a fiver on the outside. Right? You look at it, it turns to paper in the middle. It's just Monopoly money.
Oh, you're funny.
You pulled out your whole net worth to put in that money.
I went to the cash machine and withdrew it all.
You remind me of these sunken galleons, you know, where they find all the bits of gold and everything else is rotted away. If you sank in the Thames, you'd be like... your own galleon.
And then we have the pièce de résistance, which I don't wear too much because it's Cartier and we live in London, so I'm not trying to get kidnapped for this. But
is this a bracelet?
Yeah, it's a pretty penny. I also broke it because I'm just such a unit. Like my wrists are getting too strong, so I need to get the screw replaced because And it also comes with a little gold screwdriver. That's Cartier, you know, they like to do their... Yeah, so, and that thing's worth like 600 quid or something, or like a grand, so like you can't lose the...
I mean, that's got to feel like solid gold. Did you think that a part of his gold collection would be a solid gold screwdriver?
It came with the bracelet.
Is that
so it's
practical?
You screw in you unscrew it so that people can't rip it off your arm.
People say gold doesn't have a use case. I mean, there you go.
But it's a soft metal. You don't use that as a screwdriver.
Yeah, you do that.
But if you're screwing gold,
screw this.
surely
yeah,
you do.
gold on gold.
Like a soft hammer on alloys.
Yeah.
Like that. There you go. And then it's like separated.
But it's broken because the screw's fallen out.
Because I'm too jacked.
So his screwdriver is pretty useless.
Well, once I get it
the
fixed,
screw back in.
I lost the screw. So yeah, I need to go get a new screw. But yeah, that's my car.
What about the watch?
Oh yeah, this is just gold plated. So no one try and rob me for my watch. It's just Versace gold plated watch. It's not real. It's not like a Rolex. So no one try and rob me, please. But this bad boy, Cartier, that's expensive. So I don't wear it every day.
I got some gold.
Yeah, you do.
My gold on a string, as you call it.
You gold on a string.
I don't know how much it's worth. It's 2 little tiny gold rings with my initial and my partner's initial, which just so happen to be my initials as well. So if we split up, I can keep wearing it, which is great. DJ. But yeah, I have no idea what it's worth. But I like to think that if I was in like some really bad situation, I could negotiate my way out of it with my £15 worth of gold.
Yeah, mate. Yeah, if I ever get stuck, I can definitely get a plane ticket or something with my chains.
You got any gold teeth or anything?
No, I've got good dental hygiene. But if I ever need a filling, mate, and just take out the tooth and put a gold one in there.
Go on then, Ramin. You must have...
Just the teeth, I think, I'm afraid.
You got some gold teeth?
Gold teeth, yeah.
Yeah, there we go.
But I don't think they have much gold in them. I don't think it's kind of like that.
I've always wondered with gold teeth, do they actually work properly? Because it's like gold's soft. So.
Yeah,
it's not gold. It's just like filling.
Is it teeth gold?
Yeah,
it's like a special kind of teeth. They call it teeth gold, don't they? Or filling gold.
Yeah, I haven't got gold teeth.
So we're going to talk about gold today, not just Tremaine's obsession with it, but we will get onto that element of it. But I want to start, as of the time of recording right now, it's pretty much at all-time highs, or it's certainly at a point where people can say that inflation-adjusted prices back to the 80s, gold has never been better right now. Do you have a good reason as to why that is the case?
Well, actually, if you look at the gold inflation-adjusted price, it's not quite back up to that level.
Is it getting there?
Yeah, it's getting closer, but it's still below that. So it makes you realise that it hasn't really beaten inflation that convincingly like stocks have over that period of time. So the thing that concerns me when people are obsessed with gold is the return that you get with it. And always it's good to step back and look at long-term returns. What have you got for gold? What have you got for stocks? And what is it you're actually buying? What is it that you get? And with gold, what you've got is a wasting asset, which is essentially useless. It doesn't generate interest. So compare that with a bond or compare that with equity. They generate dividends, they generate cash flows, but gold, nothing. Right, so it's a wasting asset, and that's why.
When you say wasting, what do you mean by that?
Well, that means that if you buy gold, it costs you to hold it, right? So whereas other assets, the holding cost is positive.
Is property a wasting asset then, in that sense?
If
like
it's
a buy-to-let
buy-to-let,
property, yeah.
it's not, because then you get the income from it. If it's the house you live in, it is, because there you have to, you have to pay for the maintenance. Often you pay the mortgage. So buy-to-let is not a wasting asset, but. Gold, the problem is that if interest rates are high, because it's a wasting asset, that's a really toxic environment for gold. And of course, we're now in a higher interest rate environment. So that's one of the headwinds for gold right now.
Is fine wine a wasting asset?
Yeah, unless you could kind of rent it out, which you can't. It's just a one-use thing. So anything which doesn't generate an income, wasting asset. So interest rates will be toxic for it.
I know we're going to come back to gold, but I think, is it in Japan where house prices over time depreciate to zero? So the house you buy loses value constantly until it's worthless. That's completely opposite of how we operate here.
That's crazy.
So you can buy houses there quite cheap that are considered...
Like 20, 30 years
The
old.
land has value, obviously, but the house itself, I think, depreciates over time to be worthless.
Well, because everything's getting older in it.
I think maybe because they're probably built out of wood or something. I
don't know what the reasons
really
are.
know.
I saw a whole podcast about it. I heard a whole podcast about it. And they were talking about the building regulations because of the earthquakes. So there's something to do with that. But yeah, it's bizarre. It's a completely different
It
market.
flips our view of it on its head. Okay, it does. But gold has done well recently, as in the price has gone up recently. And I think a lot of people who are into it will say that it's been one of the best performing asset classes of recent years. Is there any particular reasons for that price movement?
Yeah, I think if you look at the drivers of gold, if interest rates are falling, and we are in a falling interest rate cycle, that's good for gold. A lot of central banks have been buying gold because they're worried about the US and the geopolitical tensions that we're seeing right now and the trade war. And a lot of central banks are worried that if they have even gold stored in the United States, it's not really safe, because if the government falls out with them, they may not be able to claim back those gold reserves. So, for example, Germany, Italy, they've asked for about 245 billion, or at least they're talking about it, $245 billion worth of gold to be taken out of vaults in New York and taken back to Europe, which is shocking, right? I never thought I'd see that level of mistrust of the United States over my lifetime.
But why would they hold it in the US instead of holding it in Germany, France, Europe?
Well, historically, what happened was, it's kind of historical partly, because when we had the Bretton Woods Agreement, that was before 1975, the value of the dollar was pegged to gold, and so it was interchangeable. So if you had a dollar, you could swap it for gold, and then all the other currencies were pegged to the dollar. But then that broke down, but people still had, sometimes they had trade excesses with the United States, and they'd store that cash in the US. And so one of the things you can do is store it in gold in US vaults. So I think it's historical, but that's probably going to change, I think.
Yeah.
You would think at the moment the Americans said, we're not going to honour the dollar to the gold arrangement. That would have been the moment that people were like, give me back my gold.
That's right.
Yeah, But it's in recent times, because, I made a video on gold and people in the comments were like, central banks are buying gold all over the world. Do as they do, not as they say. They're stockpiling gold. China as well, I believe, has been a big buyer of gold in recent times.
Yeah, the central bank. And then the other thing you look at is physical gold. So people buy it for jewelry, people buy it for investment reasons, the physical gold. So there are other reasons why people buy it, but central banks are the big buyers of the physical stuff. And then you've got things like, people use it as an inflation hedge, although it's not a very good inflation hedge. But I think those are the big drivers, interest rates physical buying and physical demand.
There's electronics, 6% maybe, I think.
Yeah,
Could
yeah,
that
so
grow?
The thing is, for the electronics, it may be that people substitute gold. If it becomes too expensive, you can substitute the gold for other stuff. It does have a very low resistance, which is why people like it. If you're really into electronic
Very
equipment,
high-end audio equipment is gold typically, isn't it?
If you have fancy earphones, I remember that they often have a gold plug for that reason. But I think that there are kind of substitutable metals which you can use, which if gold gets too expensive, you could swap out.
I think like 10% of all of the gold that's held in jewelry is in the threads of saris. You know, in the Indian market,
market
is
is
massive.
huge,
yeah.
They hold like the majority of the gold that's jewelry-based gold. And
It's like Indian women. holding
Indian
gold,
women.
yeah.
I mean, it's Indian culture, isn't it? Because it's seen as a way to pass when you marry, you send gold with them, and it secures the woman long term and stuff. But I guess if gold was the ultimate investment, Indian housewives would be the richest people on the planet, right?
They may yet be.
Yeah, maybe.
But what's interesting, I heard a kind of apocryphal story about the weather in India and the monsoon. So if they have a good monsoon, then they get good harvests, they have more money, and it pushes up demand for gold. So the monsoon may affect the price of gold, but I think that's just not true. But I just love the story.
So you can, as part of your community, you have like a model where you model the price of gold, like a fair value model. I'd like to know, first of all, how are you doing that? And then what does your model at the minute say about the price of gold? Is it overvalued, undervalued?
Yeah, I mean, no surprises, it's overvalued according to the model. But the way these models work, all models are dodgy, right? That's the first thing to understand. You don't trust them. They come up with random numbers and you've just got to sanity check it. But with a fair value model, the way you approach it is you say, what are the drivers of gold? Well, the biggies are going to be inflation. Most commodities, they keep up in line with inflation. So one of the inputs is CPI, US CPI, the index. Another one is interest rate, because we said it's a wasting asset. If interest rates are high, that pushes down the value of gold. And of course, it's priced in dollars. So you look at the trade weighted value of dollar, which is the value of the dollar relative to its trading partners. So those are the three inputs. So strong dollar means weak gold or vice versa. So those are the things that go into it. Currently, the price of gold, I looked this morning, is $34.28 per ounce. The model says it should be about 17% lower.
Wow.
So overpriced, but not egregiously so. It has been higher. But that is toppy, right? And that worries me because I've just bought some, So that was part of a little experiment I've got with gold, which I can talk about later. But yeah, overpriced. But the thing about these models is they're not predictive. They're explanatory models. Predictive models are much more difficult to make. An explanatory model is much simpler and really just tells you roughly where it should be.
So why is it 17% overvalued currently, according to your model?
Well, the model, I mean, the residual, what's left over is what those factors don't explain. And that's why the model's useful, because you can say, well, CPI inflation, interest rates, and the value of the dollar tell you it should be here. Whatever's left over is something else.
Is hype or frothiness.
I think one problem at the moment is if you look at the value of the dollar, it's been tanking.
Trump wants it to go down though, right?
Yes, but I don't think it was going down for good reasons. I think it's because people have been not trusting the US economy, not trusting the US to weaken the independence of its central bank. That was actually quoted as the reason why people wanted their reserves back into Europe. So I think, a weaker dollar is kind of disturbing, particularly when interest rates in the US have been high. Typically, it's US interest rates which drive the value of the dollar. If the US interest rates are high, then the dollar strengthens. What we saw recently is the opposite, and that is very, very scary because it shows that people have lost faith in the US, at least people outside the US have.
Yeah.
So I think that, dollar weakness and worries about the dollar, worries about debt sustainability in the United States. Every government, Democrat or Republican, basically doesn't care about the deficit. They just pretend that they can carry on spending more than they earn and it'll all be fine. People will keep on buying our debt. Well, that's true until it stops. So I think that's another worry, and gold might be a hedge against that. Because if the US Treasury market goes into default or people don't trust it, that's massive because it's the safest thing on the planet. So people are looking for other safe assets. So I think the safety bid for gold has certainly played a role, and the weakness of the dollar. So I think those are the two biggies at the moment. And lots of physical buying of ETFs not physical buying, but buying of physical gold ETFs in China. Lots of Chinese investors have been buying it. So, put it all together, central bank buying because they're worried about the US. A lot of people who are scared about geopolitics, again, that's fear, that's driving it up. And interest rates falling, that's also helpful. There's a confluence of many factors which have kind of pushed up the price
and
of
then
gold.
people buy things that go up in price, right?
Yeah.
Like there's then that kind of FOMO or
The
people
momentum.
jumping into it. Yeah. So, Mr. Akerele, I hear you are a salesman.
Elite salesman, yes.
One of the best, they say.
I've got a little bit of experience in the game, yeah, I could say.
Done a few deals.
I bill.
What would your compliance team say about you?
They would say that I am always nagging them, and that essentially I have beef with compliance. I love the team. Compliance slows down all my deals because every time I get to the finish line, they've got to check documents, KYC, GDPR, and it's just a nightmare. It slows the deal down by like 2-3 weeks.
It's always on both sides as well, isn't it?
Definitely
Sometimes it can be block on the other side.
Exactly.
Well, that's where today's sponsor can help.
Indeed. Vanta helps companies of all sizes get secure and compliant fast, and they stay that way.
They do it by automating compliance with over 35 security and privacy frameworks like SOC 2, ISO 27001, and HIPAA.
Yeah, all of them. And this saves businesses so much time and money.
According to a recent IDC study, Vanta customers save over $500,000 a year in costs.
Not bad.
And they also help you complete security questionnaires up to 5 times faster, which is great because everybody hates filling out forms. If you're a business that needs to prove security and compliance, visit vanta.com/making money to sign up for a completely free demo today. So on the American piece, obviously you mentioned there the lack of trust and stuff. Could we link that as well to probably people waking up to the fact that they think that they're just going to keep printing dollars, that the dollar is no longer...
the gold standard, no pun intended.
See
what I did there?
Yeah. Interestingly, I was speaking to someone who lives in Argentina the other day and talking to him about hyperinflation and stuff. And he had this really interesting point around over there at the minute, dollars have different values. So you can have different $100 bills and they will be considered different values. So the face value is not important, it's how new they are and how collectible. So he says there's these weird distortions within the currency there, and everyone's belief there is that the dollar never devalues because they deal with currencies that devalue at a rate of hundreds of % a month sometimes. So why would you're talking about like 6% in a year, like there's nothing. We've got wheelbarrows of domestic currency to try and pay for a loaf of bread. So it was interesting to me that they don't view the dollar as something that that can be printed away, but it seems that the Western world has been like, they're just going to keep printing this, or they're just going to keep dumping dollars into the system. And is the flight to gold a way to opt out of the dollar in that sense, do you think?
Well, that's what gold bugs say, right?
Yeah.
They've been saying for a long time. It's so very much the narrative has moved over to the same narrative for Bitcoin and cryptocurrency, which is that, okay, they can print this stuff. It's fiat money. It's paper money. It's only worth what people put, whatever faith people put into it. But that faith has been very strong in the past. Now it's starting to weaken. And that's worrying. So I think they've got a point to a limited extent. The fact that you can only pay taxes in US dollars means that it'll always have value, right? That's the ultimate.
Or the price of oil is linked to
commodities are priced in it.
Yeah.
And a lot of trade's done in the US dollar.
You're ultimately pricing your gold in dollars.
Yeah.
It's like the Bitcoin thing, isn't it? It's like, it's worth $120,000. It's like, when's the point that you stop linking it back to that dollar price?
And it may be that commodities aren't always going to be priced in US dollars. If China's a bigger buyer of oil, then they might price it in renminbi. But everything at the moment, certainly all commodity prices are in dollars. So people always think in terms of dollars. But I think that may not be true in the future. But look, I think the dollar dominance that we see right now, certainly during my lifetime, I'd be surprised if the dollar loses its reserve currency status. But it would take a lot of work by the US government to make that faith disappear. But they're certainly doing a good job of it so far.
Right. Do you think then that that narrative around the gold price moving up is born out of a fear that probably won't materialize.
I'd be shocked if it did. And I think even with the level of rhetoric coming out of this government in the United States, I'd be amazed if they went as far as to tank their own currency. I think there's always a certain point at which Trump backs off. They call it a taco trade. Trump always chickens out, and that would definitely be a red line. Because who wants to be remembered as the US dollar that? Who else? The president that trashed the US dollar. I mean, nobody wants to be remembered as that guy. And I can't see a kind of catastrophe happening. They wouldn't go that far.
Do you think there's a point then when, because one thing that shocked me when I looked at gold prices in back tests I did was just how volatile gold is. It really swings around, has these long bear markets and big bulls. And I think in the late 70s or the 80s, it went up like 130% in a year. It's wild for a safe haven asset. Do you think that we could see a crash then in the gold price?
Oh, yeah. I mean, it's unbelievably crashy. It always has been historically, like you say. It goes through huge periods of growth, like you say, when we came off the gold standard. I mean, you could argue that at that point in time, it was just finding its level, right,
Price
relative
discovery,
to the dollar.
yeah.
Price discovery. Whereas there have been decades, like you say, also, where it just flatlined and it didn't go anywhere. So I think we're more likely to enter that kind of period now. But remember, the source of the worry right now is this presidency. And while the presidency's there, that, upward pressure on the price of gold is going to continue. So I don't think it'll happen during this presidency. It's interesting to look where we go next. Will America choose another populist politician to replace Trump? And if they do, then I think probably that would maintain the price of gold. But if they decided to go down a more conventional route where actually, this trade war stuff, we're going to stop doing that. We're going to go back to the way things were. Well, that'll, I think, push down the price of gold.
Yeah, and the whole the papers and the accusations that are released and not released. He's doing a good job of annoying everyone, isn't he? Really? Yeah. Okay, so I want to talk then about the inflation hedge argument, because you mentioned that it's not a very good inflation hedge, and I think that will really rattle some people's view of gold. Can you explain first of all what you mean by what is an inflation hedge, and then why is gold a bad one?
Yeah, I think people think of gold as maintaining its value even if the government prints lots of money. It is extra governmental in that sense. It's international, just like Bitcoin is. So the government can't control the price of gold directly. They can confiscate it. They have done that in the past. The US did that in the past, but they can't control it. So that's why people trust it, because the government can't fiddle with it. But if you want an inflation hedge, you want something that goes up in line with inflation. Now, there are inflation-linked bonds which do that, but they're quite technical. People don't understand them. I took a long time to understand them, and they are very technical. But they work, right? They keep up in line with inflation by definition. The coupon goes up in line with inflation. The principal goes up in line with inflation. That's a really good hedge if you are worried about long-term inflation. You've got to understand break-evens as well, so there are technicalities. But people say that gold is a good inflation hedge. But if you actually look at how well it's tracked the price of, or the kind of CPI baskets or the RPI baskets in the UK or the US, it just hasn't been very good. They've had long periods of low inflation when the price of gold was completely unlinked to what was happening with the RPI index. So it's just not linked. Just look at the correlation, and it's just not very strong.
When I looked at it, I think it does okay in black swan events, but that's like a flight to gold. So it's almost a self-fulfilling prophecy of, so I look at September 11th, I think it did okay then, but it's because in those moments of panic, people panic and they just buy gold because they're like that. When people panic, they buy gold. So it's almost a narrative more than you're talking that if we have persistent or consistent inflation, it's bad in those times of outrunning it.
So the fear hedge is very good. When people are scared, they buy gold, except in COVID, that sell-off that we saw then, it didn't work particularly well. And neither did cryptocurrency. Cryptocurrency tanked. So the things which worked in that one, obviously cash didn't crash, and short-term government bonds, Anything which was in a money market fund would have been okay, but that was a really severe sell-off.
It's interesting that then, because I would say that COVID is the closest to the whole end of world sort of narrative. September 11th is a shocking and horrible thing to see, but no one in England thinks, oh God, the world's about to end.
Yeah.
But COVID, you could buy into, we might not come back from this. We don't know what's about to happen. And that's the moment where people would argue that you want some gold in a bag, but gold didn't do well.
It didn't do particularly well. It didn't lose as much as equity, but it did wobble, and that was surprising. But so did government bonds. You know,
Everything
a lot of
wobbled.
stuff,
Everything, I was about to say everything wobbled.
Yeah.
Do you think Bitcoin's a good hedge for against inflation? And also, have you heard that Bitcoin, obviously digital gold, it kind of like doesn't follow, but like it lags behind gold. So like gold's up now, Bitcoin's been coming up, and now it's up a little bit. So do you believe that there's a correlation, and do you think Bitcoin's a good hedge against
Well, the good thing about correlation is it's something you can measure, right, physically. So I never pay any attention to the narrative. I just look at the numbers. And if you look at the numbers, you can separate all investments into two groups, right? You've got your risky assets, which are correlated with equity, where it's ranked with positive sentiment, right? People get excited, they get happy, they buy risky assets. Equity, Bitcoin would definitely fall into that category. And then you've got your safe haven assets, which do well when people are scared. And usually government bonds would fall into that category. And Bitcoin definitely wouldn't, because when people are scared, they sell Bitcoin.
Yeah.
And in fact, if you look at the correlation of Bitcoin, you can actually model it very well with a 3 times levered NASDAQ index. So if you buy US tech stocks 3 times daily levered, it actually tracks the value of Bitcoin incredibly well. And so it's a very much
Like a
risky
juiced up
asset.
tech stock.
Exactly.
Yeah.
Because if you think about the kind of people that buy it, well, it's usually the same guys who buy the tech bro stocks as well, right? So that's why I think you have to look at how things behave. So is it a safe haven asset like gold? No.
No way.
No. Is it going to do well when people are kind of exuberant? Yeah. So that's how I think of Bitcoin. But as an inflation hedge, yeah, it's beaten inflation because it's had unbelievably good returns. But is it safe haven? No.
And yeah, inflation hedge over a long period of time, but in a moment where we get spikes in inflation, is it moving the opposite way? Because that's probably what people want, isn't it? They want to protect their portfolio from short, sharp shocks in inflation. So,
and you've also got to look at the driver of inflation. So if it's going to be an oil shock, now historically this is what happened in the past. You've got some kind of war in the Middle East. You worry about the supply of oil. You get an oil price shock. So that you get a surge in energy prices. Equity markets sell off. And if you wanted a hedge, then gold would not be as good as oil.
or crypto, because it's energy hungry. So the cost of mining the stuff goes
You'd have
up a
thought
lot, right?
so, but it's much more strongly driven by fear. Right. So that's what would make crypto sell off in that kind of environment. So another hedge to have for that kind of crisis and that kind of inflation is some kind of commodity exposure in the energy space. So that would usually be some kind of gold. That would be usually some kind of energy ETF.
But do you think people can hedge against these kind of things, or they should even try, or is time the hedge? Is it just you've got to kind of live through these moments? Because you're saying now, oh, if there's an energy crisis, or if there's a pandemic, or if there's a terrorist attack, it's like they're all very different, right? And who knows what the next one's going to be? Should people just go, shit's going to happen, I'm just got to ride it out?
But look, for young people like you two, right, you're still accumulating your wealth at this point. So if there's a crash, great. You know, you can buy. Yeah. And, you know, in 20 years' time, you'll be thinking, oh, that was great, time to buy, and look at the value now. So that's why volatility for you and crashes are a great thing. For me, if I was about to retire, I'm not, but if I was, then I'd be worried that, you know, the value of the stuff I'm going to be taking out is now no longer going to be so good. So I think that's why it's probably better to think about these hedges when you're in retirement rather than pre-retirement, because you guys can ride out volatility. You can monetize volatility by buying more stocks. Yeah. For people who've got more gray hair like me, not so good. So that's why I think gold probably fits better into a portfolio post-retirement than pre-retirement.
You mentioned that you bought some physical gold through an ETF. Is that different to, like, could you explain that a little bit? Because I assume if you're buying an ETF, you're buying digital. So, is it like an ETF backed by a big physical gold reserve. Or
Yeah, they
something.
go buy the gold.
They buy gold and then you're investing in it, but you've got it digitally, but they're storing it for you.
That's exactly what it is. So if you see a fund which is physically replicated or physical gold fund, that means they've got a vault somewhere, and every pound you put into it, a pound of gold appears, trundles into their vault. Maybe
But do
not.
they charge you for like the storage of the gold?
There is a fee, obviously, for that. So that's one of the drawbacks of these kind of products. But now we've got ones which have a fairly low fee. When I first started out, 2017, 2016, the gold ETFs were quite expensive. Now I think you can find them with sub 0.2% assets under management fees, ongoing fees.
What
So
if
I
they
think
can't get their hands on the gold? What if the inflows are so
it's
massive?
funny
They're
because,
like, where can we get the gold from?
I think some people insist on knowing where the vault is. So on some of the documentation for these ETFs, you can see where the vault is. So for the London one, they store it in a London vault. And personally, I didn't used to be paranoid about this, but now I am. Right. So
Have you been down there to be like, which bit's mine?
I would love to see that. It's funny because when I used to work for a Swiss bank, we used to have gold vaults, and that was the one thing everybody wanted to see.
Of course.
Well, the Bank of England have got a big one, haven't they? And
Not as big as it was.
no, who was it who went down? Who's Idris Elba? And I was like, oh, he gets to go everywhere. Do you know what I mean? Like, they were like showing him around, and I was like, that. I mean, I'm not a gold bug, but I would still look. There's something about that. Just being in a room with billions of pounds of metal,
At the Bank of England.
Yeah,
They came on the podcast, guys. Idris Elba 2.0, get me down there.
Yeah. I think
have
it's
some fun in there.
I do think when I'm around bank, that area, there is just billions of tons of gold beneath my feet. That's crazy to think, isn't it?
But recently what happened was that everyone was trying to get gold to go back to the US. It was kind of an interesting trade. And I was listening to one of the Bank of England governors who was talking about it, because during one of the press conferences, which I have to watch, he was talking about how he couldn't get into the bank because there were so many lorries in the courtyard ferrying gold out to New York. Because the big trade was, I don't know if you were aware of this, people were taking money from London, taking it to New York, because people thought there was going to be a tariff on gold. So people were thinking, well, I'll take my UK gold,
Put it in America.
I'll shift it to the US, because there was a premium on US gold versus UK gold. And the problem was that it's a wrong shaped bar. So you have to take it to Switzerland, melt it down, put it into the right shape, and then ship it to the United States. Unbelievably expensive. But if the tariffs had happened, which they didn't,
It'd be cheaper.
yeah, you could make
You got to
money
look
with
for
it.
lorries that are like sat on there.
Suspension ruined.
Yeah, because you're
Just
like,
dragging on scraping on the floor.
that's not bread in there. I had a contact who worked in banking quite high up, and they were telling me a story once over drinks around how the direct, one of the MDs of the bank was talking on the phone and was talking about tons, like, oh, we need to move 6 tons and 7 tons. And they were talking to me, they were like, oh, I'm talking about getting cash up north. And we do it by the ton because we need to supply all of the banks when cash was a bigger thing. And they would load it onto vans that were unmarked or Hovis, because they don't want like Barclays bank van driving up the M6 or whatever. So
Not getting past Birmingham.
moving tons of notes in the backs of these like unmarked vans, or vans that they would borrow, bread van or whatever. And I was like, that's fascinating. Imagine you're just on the motorway and next to you there's £1 billion in cash in a van.
Like a Hovis
van. Yeah, you think it's a McVitie's Jaffa Cakes. But yeah, look for the van that's set like this on the axle.
You see, we shouldn't be making these podcasts and videos. We should just do a big heist.
That's it. That's it. Big one.
We'd be the one that we just end up robbing a load of sanitary pads.
We've got loads of bread.
Yeah. So T, recently we had a conversation with tax expert Dan Needle, and I think one thing that became very apparent is you're going to have a real big crypto tax bill.
I am.
What are you going to do with the money, mate? Where are you going to put it?
I don't know. Like every year tax season comes around and I'm stressing. I'm like, how much is my bill going to be?
I'll tell you how I do it. What's important for me is that money, that tax money, is completely separate to every other bit of money in my life, because otherwise I start counting it as mine. I start locking it away in the stock market or whatever. So I use a tied instant saver account that's just attached to my business, and I just put the money in there and keep it in there, and that's solely for the tax.
You can just ping it over to tax man when it's tax time.
I just know it's allocated for, and the stress that takes off me is worth its weight in gold.
Every January I'm stressing.
Check that out, mate. We've got a bit here actually about how you can check it out yourselves. I'll let you read it out because you're the best at reading.
I mean, I'm the star reader of the show. If you're a sole trader or company owner, check out Tide. New members can get up to 4% AER variable for 6 months. I say up to because it depends on how much you deposit in your account. The more you save, the higher the rate.
You can get this deal, plus you can get £100 cash back if you fund your Tide Instant Saver account with £5,000 in the first 30 days. You get that by using the code MAKINGMONEY. Terms and conditions apply. The code is Making Money, all one word, and you'll find the full terms and conditions and all details of the offer in the description below. The variable rate is correct as of the 7th of August 2025. I did a bit of back testing. I try. I know you're deep in the back testing game, but I did a bit, and what became clear was that when we talk about gold, we often say, oh, if you invest in gold there and there, it didn't do that well. But actually, if you DCA'd into it and you were rebalancing, that could actually have done quite well in portfolios. So do you think we do a disservice when we talk about gold, that we focus on it in that sense? And is there an argument that a dollar cost average approach as part of a portfolio is actually something that's good?
It's just organically the way we invest. We earn money, we save it. So we're all dollar cost averages, really. So yeah, I think that's true. But really, you do have to look at the long-term returns. And there, it just isn't as good as equity. That's a simple fact. You're going to get better returns if you invest in the global equity market if you compare it with gold. And one of the things that really bugs me about gold is when I make a gold video, people are saying, oh, look, over this period, it did so well.
Since 2000, it's done better than X, Y, Z. Yeah.
Exactly. And they're so selective about the time periods. And the fact is that it's just not going to be, intuitively. So when you invest, you're putting your capital at risk and you're buying something. So when you buy a company, it's something which provides value, it provides growing profits. And if it can carry on growing its profits at a certain rate, that's how quickly the price goes up. It tracks the profits over time. That's the long-term trend, right? So as long as they can carry on growing their profits more quickly than the price of gold would be increasing and more quickly than inflation would be increasing, that's not going to change because that's the fair price, right? So really, it's a question about how quickly can companies carry on growing their profits. Now, my big concern at the moment, I guess, if I was thinking, beyond my lifetime, would be what's going to happen with demographics. Because if the population on the Earth is limited, then there's only so many things you can sell to so many people. So profits can't keep on growing forever if you've got a shrinking population. So that will potentially be a cap on growth for profits. But if we do manage to get off planet, which I think we will, then growth is unlimited. And in that case, you'd want equity, which gives you the unlimited exposure.
Just say get off planet.
Yeah.
We're going to Mars.
Yeah.
Yeah. So you wouldn't just colonize
in our
Mars.
lifetimes.
No, I'm talking about long term.
Okay.
This is what my podcast co-host calls science fiction shit.
Yeah, okay.
But
The
it's
technical term.
But the point is that you've got limited resources on a planet, and that caps your upside for equity. If you've got unlimited resources for the whole solar system and beyond, well, suddenly the game's a very different one.
Okay, so talking of off-planet then, gold reserves off-planet are quite high.
Yeah.
There's asteroids that have got more gold on them than potentially... the gold we have was brought to us on the back of celestial bodies, potentially born in the hearts of stars, cast into the universe, carried here on asteroids, put in the ground, we dig it up.
How poetic.
We form it into bars and then we stick it back underground. We go, look, it's worth money. It's pretty crazy. Yeah, it is poetic.
Very poetic.
I mean, I can kind of see why people love it. It's stardust, right? It is literally stardust. But if you think then that we are going to get to a point where we're off planet, are we also going to get to a point where we have so much gold that it becomes valueless and every electronic device is full of gold because we're like, well, there's loads of this stuff?
Well, yeah, if the supply increases massively, one of the reasons why it's valuable is because it's scarce. And if it was suddenly very easy to get hold of.
It's not actually scarce in that sense, though. The ocean's full of it, isn't it? We just can't get it out.
Yeah, but the cost of getting it out is very high.
It's hard to get at.
There are lots of great stats on, amount of gold out there. If you took all of the gold that's ever been mined, and about half of it's come out over the last couple of decades, but entire history of humanity, it would be 22 cubic meters. Or, as we're in prom season, it would be, if you go into the Albert Hall, you've got the kind of orchestra section at the bottom, it would fill up that orchestra section, or 35 London buses. But that's it. That's the only
gold.
That's all the gold.
Doesn't sound that much.
It isn't much.
35
and that's why,
London buses.
Yeah, the majority of it's still in circulation as well. So a lot of the Roman gold is still floating about.
Well, that's
so the
what's
stuff
weird
that
about
you've
it.
got is probably,
There was an interesting story in the FT about making gold, which I thought was interesting. They have a company from the United States where they've got this idea of using fusion reactors. Now, one of the side effects of
Alchemy.
nuclear fusion, that's exactly what it is. The process produces neutrons, which kind of flood out of the reactor. So if you put this isotope of mercury just outside it, gold has got 79 protons, mercury's got 80. So if you can get rid of one of those nasty protons,
It all turns into gold.
It turns into gold. Radioactive gold, it has to be said. So you have to store it for like 14 to 16 years to get rid of the radioactivity. But you could produce about 5,000 tons of gold per gigawatt of electricity which they produce. So again, you can make it potentially.
Is lead the other one?
Yeah,
That's
yeah.
very similar to gold, isn't it?
It's funny because CERN made it out of lead. So in the Large Hadron Collider, they produce tiny quantities of lead, but that's not cost effective. You couldn't use a Large Hadron Collider to produce gold. It wouldn't produce enough. But this process presumably would. And because the gold price is so high, it would be worthwhile doing it. You can make other metals the same way. But because gold is precious, it would be the one you'd go for.
But there is an argument then that we might have a lot more gold in the future than we have today, and we destroy that scarcity point.
Exactly. So I think that's another thing you have to kind of factor in as a risk scenario. If there was a process which produced it, then presumably the price would go down.
How big is this gold asteroid? Like
You get it on a chain.
Yeah, just dangling on my chain, just dragging it behind me. No, but like how big is the how much is it worth? Like there's a gold asteroid floating around up there.
Well, I think the stats were that it's got like 10 times more gold on it than we've ever mined. It's massive.
Yeah, so if we get our hands on that, then this is going to be worth like
But
2p.
I think that the logistics of mining asteroids is pretty out there. You're talking about getting off planet. Maybe we'll see a ship to Mars, but floating around digging on asteroids, that Armageddon style, Bruce Willis. I think we're good. That's
But I mean,
a
this
little bit
guy,
off.
what's his name? Richard Branson, was it? They all went up to space with the celebrities recently, just for like a photo, or went up to space apparently.
Katy Perry kissed the ground when she got down.
Yeah, exactly. Like, allegedly, they went up. I don't know if it's true or not. But I mean, if you're,
Oh, God.
I love every conspiracy theory
The
out
moon
there.
landing.
The moon landing's fake as well. No, this one I thought might be fake because I mean, they came down, the door wasn't hot, and then they opened the door, and then they closed it, and then they opened it again to try and catch it on. I don't know. But anyway, if you can get up there to space just to like have a little photo op, I mean, you might as well go up there and go find this asteroid and get all the gold off it, right?
But not just that, you don't need to send people up. Now that you've got AI.
Yeah, send a little robot
with
up there.
AI which is embodied. If you had a robot that was sentient, you just send them out and they can take their time, they can send it back. So, there are lots of different ways you could mine it. But I think AI would probably be the way to do it. It doesn't put people's lives at risk and it's lower cost.
I think about the way we mine gold now. We had Ed Conway there, the Sky economist, and he's written an amazing book. One of my
Loved
favourite
it.
books.
Me
Did you read
too,
it?
I love it.
Yeah, did I tell you to read it?
No.
Let's say we did.
don't think so.
I told you to read it.
Okay.
Anyone who's read that book is because of me. It's an amazing book.
Yeah.
The audiobook's really good as well. It just makes you see the world in a completely different way. And the process by which we mine rocks today would be so alien to our ancestors, even a couple of 100 years ago, that the gold we get out the ground through blowing up mountains and sifting them, they would probably be like, oh, we're never going to be able to get that gold. So it is conceivable that we find ways to get more gold, isn't it? In that sense. But I don't know. We get more gold now than we did then, but the price hasn't dropped. So what's going on? Do you understand what I mean? We've got better at getting it, but yet the price is still going up.
But we haven't got enough of it to swamp the market. I think that's the point. The rate at which they can mine it, it's faster than in the past, but it's still not enough compared to, say, an asteroid, which would produce a huge amount, or power plants that would generate this stuff, as a side product of energy.
As a waste product.
Yeah.
That would be crazy.
That'd be amazing. It's like the beer industry in Burton. The waste product is yeast, and the Marmite factory sucks it all up and turns it into that devil sweat that people spread on toast.
Devil sweat.
Ringed out of the jockstrap of Satan. That stuff.
I love Marmite.
Oh God! Yeah, it's like, what is it? Black tar on toast. It's horrible.
Horrible
But I like a
stuff.
Twiglip, so riddle me that.
Weird. It's like the waste product of oil. I think is like Vaseline. And then they didn't know what to do with Vaseline. So I know you can put it on your lips and like,
Yeah.
And so like that stuff
that
in the
right?
tub is they scrape it off like the sides of the vats or something.
Oh my God.
It's like a waste product, Vaseline.
Yeah.
They're like, what can we use? Oh, let's sell it.
People should stop spreading oil on their lips. 'Cause
Yeah.
I feel like it's a a false economy. It like dries your lips out more. Oil
and then
based.
you need it more. So yeah. I don't use
Burt's
Vaseline.
Bees.
Burt's Bees is quality.
Yeah, I bought Burt's Bees because you told me about it last
There
time
you
I was
go.
here.
Just like
Reading a
reading
book
the
and Burt's Bees.
It wasn't a book. But yeah, the
Did you
Burt's
like the
Bees.
Burt's Bees?
Burt's Bees is very good.
It's amazing.
Yeah,
Game changer.
Yeah. Bert is a real guy.
Really?
Yeah. He did, like, it's not just a branding thing. Bert was a guy. I listened to NPR's How I Made It. Yeah, I listened to it on there. I think it's a pretty ruthless story about his like partner at the time. He was a bit of a hippie guy, and then his partner, kind of like Ray Kroc McDonald style. He just wanted to have his bees, and he got shafted. I don't know, but yeah,
Exploited the bees.
yeah. They're milking all them bees for that.
Like,
lip
can we get
balm.
a break? And he's like, no, get me more. Get back to work.
Yeah. Anyway, gold. Who do you think should be buying gold? Do you think anyone should be?
Is it a must-have in a portfolio? I think no. And I think for someone who's just starting out with investing, the one fund approach, the bond equity split, or the money market fund equity split is probably all you need, because you can dial the risk up and down. You've got your return. That's everything that you really need to control. And the good returns that you get with equity are what you should be focusing on. But in retirement, think of it this way: if there's a crash, you have gone from putting money in when you could be making use of the crashes to taking money out when, if you're 100% equity, just to take an extreme case, let's say you're taking out 5% every year, the size of the pot halves because it's 100% equity, and that could happen. Now you're taking out twice the percentage every year to live. So that's why the compression is dangerous, and that's why you have to diversify. So if you had gold in there alongside equity, then the gold won't have crashed. You could sell the gold instead of the equity, give
hold
equity time to recover. So how would you choose which things to buy, which wouldn't crash? Well, you choose as many as possible. Gold is one of them. Maybe a commodity fund would be another. A money market fund would be another. A gilt ladder, where you buy UK government bonds, that would be another. All of these things would give you alternatives in an equity market crash to live off and eat and sell while equity recovers. So you don't milk your portfolio too much and shorten its life too much. So I think post-retirement, there's a fairly good case to be made for gold. Now, some people buy it in the accumulation phase, like you two. You get these portfolios like Golden Butterfly, where a fifth of it is in gold, and it backtests very well. So, some people do, but I don't think it's an absolute necessity.
And when you're saying they backtest very well, what do you mean by that in terms of what are the results that it produces?
So in terms of the returns it produces, and I think this is primarily because during the crash periods, it doesn't crash as much. The return of the individual assets isn't as high, but when you get the crashes, the recovery time's faster because it didn't fall so much. So that's why
Is it the risk-adjusted return point again, that it delivers a better risk-adjusted return?
That's exactly it. You look at the risk-adjusted return, units of return divided by units of risk. So that's, on a risk-adjusted basis, you could make a case for including some gold, even in the accumulation phase.
Yeah, and would that be for people then that are saying, I want to invest, I want to do okay, but I don't want to see the value of my investments drop by a lot because that's going to scare me off. So you can improve the risk-adjusted return, a smoother ride, but the end destination would likely be lower than if you just had the equity position, which is like the full throttle version.
Yeah, I mean, psychologically, the benefit of that is that you don't see the crashes. And for many people, they don't like the crashes. If you're used to it psychologically,
You kind of love them, don't you? When you get used to it, you become like...
Then it's fine. But for some people, seeing that 20, 30% fall, they don't sleep at night. I know that because I speak to them. They tell me, I just couldn't even imagine that. So for those people, this would make more sense. It would be more psychologically tuned to the way they approach investing. And I think for certain people, that would be a benefit.
So, Ramin, definitively, do you think gold is a good investment?
I don't think it's an absolute necessity. So if we look at portfolios and I don't see gold, will I panic? No. Whereas if I see no safe assets and the person's got a nervous disposition, that would worry me. But, as part of a portfolio, a diversified portfolio, certainly in retirement, I think it's got a place.
Yeah. What are you saying to the people that are sitting here screaming at the screen now, or on audio in their cars or on the toilet or whatever? Gold is money. This is a comment I get. Like, the gold is real money. The money we have is not money. its value, it's all of this. It's thousands of years old. It will be here for thousands of more years.
Try paying your taxes in gold. Not going to work. So if you buy sovereigns in the UK or Britannias, those are treated like
Because
currency.
they've got the king's face on them, and they've got an amount. But they're
you
worth more than the printed amount on them, probably, right?
Probably, but the difficulty there is if you buy physical gold, which is that if you have to sell it, it's often quite expensive to sell. There's a big bid offer spread. And the other problem, I guess, is going to be storing, because some people physically store it. My dad did when he bought gold. He hid it somewhere in the house. He did an unbelievably good gold trade. You remember when it surged up to the 80s, 1980? He bought some in the 75, I think it was.
Wow.
Hid it in the house, didn't tell me where it was. And that really annoyed young Ramin, because I looked everywhere for it.
Where's the house?
Yeah.
Yeah, it'll be like that guy with the treasure in America.
No, he sold it at exactly the right time, just
Oh,
before
he
the
did sell the gold.
just before that bubble popped in 1980.
Bloody hell, he did
So he
well.
timed it perfectly.
Buying gold at the time when they were saying the dollar is no longer pegged to it feels like quite a risky thing. You know, they're basically rewriting the rules at that point of the monetary system. And your dad was like, yes, let's buy a bit of the gold.
Well, he was an economist and he had lots of really crazy ideas, but sometimes he was very right. You know, he made a lot of money in business, so, you know, obviously he knew his stuff. So, but I wish he'd told me where it was.
You think? Did he know about you becoming a YouTuber and doing what you do today?
No, sadly, that happened after he died. But
I think he'd be very proud.
I think he'd be pleased, yeah.
Yeah.
I've done all right.
Obviously, he knew your work within the finance sector.
Yeah, but when I was a scientist, he wasn't really into that. He didn't think that was the kind of valid career choice.
What kind of science? Yeah. Pish.
Pish, bro,
Who needs
nonsense.
science?
Do something serious with your life.
What kind of scientist were you?
So I did a degree in physics. I got a first in physics, and then I did a PhD in physics, biophysics. So I was looking at anesthetic mechanisms and how our brain reacts to anesthetics. That was really interesting. And then for postdoc, I did modeling of how children learn language. So it was neural networks. So all this stuff about deep learning, neural nets, you know, that was the kind of stuff we were doing. So it's kind of given me an insight into
You're
that.
pretty well
which is interesting.
positioned.
Well, you know, it's just a good positioning to understand the world, I'd say, right now. You know, that stuff about the fusion reactors, you know, that was obviously.
I was going to say, you could be making some gold, building an AI
You could build a
language
little
model.
rocket to get us up to
Yeah.
the asteroid to get some gold.
I still think we should do the heist.
Do that.
Yeah.
We'll talk about it off camera.
Yeah.
Do you think that gold's the best commodity, or do you think there's a better commodity than gold out there?
Oh, that's an interesting question. I mean, I like the fact that you can buy it without physically buying it. You know, I think these ETFs give you a lot of choice. So, you know, which commodity do I like best? I'd say I'd probably go for the kind of energy ones because they're more useful. Copper, I think, is very interesting right now because there's a huge demand for it. If it becomes expensive, you can't swap out copper for an alternative because it's got such low conductivity. It has all these properties which no other metal has. And with the transition to renewable energy, there's such big demand for it. All these offshore wind farms, you have to pipe the energy back on shore. Electric vehicles use huge amounts of it, actually just built into the car. So huge demand, limited supply. And I've got a copper portfolio, which I did via copper miners, but you can buy copper funds. So probably I'd say copper would be my favorite at the moment.
Gold is not an alternative. Is gold not an alternative to copper? I'm not saying that copper's ever going to get to that price, but you say the copper's got characteristics that no other metal has. Does gold is
When you look at price. So
yeah, for
presumably,
that cheap.
Exactly.
Yeah, for that price.
But the conductivity of copper is very low. Sorry, the conductivity of copper is very high. The resistivity is low.
So it's relatively cheap. It's like a poor man's gold in that sense. Then, if you could use gold, you would. If it was cheap enough.
I suppose so. But copper, I think, is going to have big demand in the future, and it's a useful metal, whereas gold, not so much.
How many portfolios do you have?
I've got loads in my fund portfolio.
Yeah, you've got your portfolio.
Oh,
your
my core is one fund.
Yeah, but then you've got all these little tests that you're running all over the place.
But that's why trading 212 is great, because you can have these pies and, you know, you can have zillions of little experiments. Like some of them, it's like literally 100 quid. But the core, 90% of it, one fund. You know, very simple.
It's just you come and you constantly drop, I've got a little copper experiment and this and that. And
Oh,
that.
yeah,
So
that's what's great about the kind of ability to create little pies.
So that period of time where we came off the gold standard, gold has this track record of thousands of years. We've obsessed about it as a form of exchange and currency for as long as basically human civilization. At that moment, we delinked that relationship. Did gold change then? Did the narrative around it change? And should we only really view performance beyond that point?
I'd say a little bit beyond that point, because you're never going to come off a gold standard again, right? And that period of price discovery, when the price surged unbelievably, I don't think that's going to be reproduced. So I'd argue,
Mid 80s.
Yeah.
And you would say that the only returns that matter for gold are from the mid 80s because
It floats,
we changed the game.
Yeah.
Could we ever go back onto the gold standard?
No, because economically it's just crazy. If you imagine that you've got an economy where the amount of money has to keep in line with the size of the economy, if that money's linked to the amount of gold you've got in your reserves, then you have to increase the amount in the reserves in line with the economy. And you just wouldn't have enough gold.
Run out of gold.
It's just stupid, you know. It's
Unless
like
we start mining asteroids. Then
yeah,
maybe,
but then it kind of makes the gold value
Go down, so you can need even
anyways.
more gold.
So do you think people who throw up the argument of, gold has delivered X, Y, Z against inflation for hundreds, thousands of years, they're failing to recognize that at that point we changed the game, and is it a different kind of asset now beyond that?
After losing the gold standard?
Yeah, after losing the gold standard, after no longer linking it to money in that sense.
I think psychologically there's this remnant which looks back to that period where people still see gold as very safe. I mean, central banks do it, right? So that's what we're seeing right now. Lots of central banks buying it. I think the problem is that you do get these changes in supply, and that would radically change the value of gold. So if we did get the asteroid, if we got the ability to manufacture gold from other materials, other elements, again, that would fundamentally change the game. And people just don't price that in.
Do you think central banks are wrong with their view of gold then?
I think they're right in the sense that it's a safe asset. What else would they buy? That's the difficulty they face.
That they can store and keep, and everyone agrees that it has some value internationally. Because it's.
If you imagine you're a central banker, think about it, right? So you've got this huge wad of cash, which you're looking after for your country. I mean, it is like playing for England. It's not glorified in that way, but that's what they do. They keep the national treasure. What would you do with it? Would you put it into Bitcoin? I don't think so. But, what are you going to invest in? It's not easy to do.
Yeah, because you need it to be internationally valued. You need the Chinese to say, we recognize the value of that thing in your vault. Otherwise, you might as well just store, local art. And people be like, well, we don't really value that. Cornish pasties.
Yeah.
Do you know what I mean? We've just got a stockpile of Cornish pasties. Greg's sausage rolls or something.
And when the world's falling apart, it's got to keep its value. And that's what gold has been really good for historically. And I think that's not going to go away soon.
So you think for central banks, they have no other option? What else can they buy? Could they not buy equities?
Some do. And in fact, some of the
Sovereign
reserves,
wealth funds almost.
Well, some of them almost become like that. So, I know for a fact that some of the central banks have been doing that. But the problem always is the volatility. If you've got something which is crashy, then presumably if there's a market downturn and there's a crisis where you need the gold or the reserves, if it's in equity, then it would have crashed, whereas gold wouldn't.
What about the tax argument? So we spoke about the coins before, and I know that because they're legal tender, they'll be free of tax on the gains. Do you think that's do you think that makes the gold argument a better investment if you're buying these coins?
I mean, certainly some of our community do that. We had this funny chat from someone who said, I bought some, but he was saying he stored it in a safe in his house. I thought, that's pretty brave of them. But the question is always about storage, about selling, liquidity. Who do you sell it to? What's the price you get? If you buy an ETF, you're going to get very good pricing, very competitive bid offer spreads, institutional level bid offer spreads. Whereas if you're selling to some, gold,
we buy gold.com.
Yeah.
They're going to scalp you. They pay
There's a
fees
potential
on
for
both
that.
sides. Yeah.
So that's what keeps me away from it. That's why I'd go for what gold bugs call paper gold, which is ETFs, which give you that exposure. For me, it's just simpler.
Yeah, I liken it sometimes to, it's different, but people, when they talk about Rolex watches, like, oh, they're a great investment, blah, blah, blah. When are you ever going to sell it? Look, when is the moment that you sell that watch?
You got a couple of them.
Yeah,
But yeah, if you got one, you're not selling.
People hold a lot of sentimental value, and they like to look at it and polish it, and you know. And then I can't think of the day where they go, "I'm selling it," unless you know they're desperate, and you know they get rinsed on the price because they're desperate. They need to sell it quick, and you know anyone I know who's ever sold a Rolex is going bad times. You know they're never selling it in the good times. Obviously, if you're a dealer or a trader of Rolexes, then maybe. But gold seems a bit like that to me, that people like having it and keeping it and like having it and looking at it. When is the point that they're going to go, okay, I'm going to get rid of all this thing now that I've like collected over years?
It's funny. I mean, when I look at my portfolio and I think about the wealth I've accumulated over time, it is very abstract. It is just a spreadsheet. And it's hard to think of it in concrete terms. Whereas if you actually have one of these Britannias in your hand,
I bought that in 1974, and you have a sentimental value, and it does look nice.
and you can show it to your family.
Yeah.
You can say, look, you know, this is
Yeah.
what we worked for.
And
So I can see why people do it.
They feel nice, don't they?
Yeah.
They're like heavy and not like your tin jewelry.
All right, mister, I've got a bead on my wrist.
Yeah, it's not heavier than all of yours, mate. Heavier than all of yours. Yeah. Okay. So, what final question then? If someone wants to buy gold, what do you think is the best way for them to add that to their portfolio?
I'd say, first of all, don't buy too much. You know, don't kind of go overboard with the percentage that you buy. So 10%, you know, 20% at a push is the kind of levels that people buy. If you are going to go for it, there are many cheap funds which give you exposure to it now. So you won't be paying more than about 0.15%, I think is the cheapest for the UK investor. So just look at the expense ratio, because gold is gold, right? There's not much to choose between one fund and another. Physical exposure is what people usually go to. Read the fine print, look where the vault is, because if you care, I care, I certainly do, then it's certainly an important factor. But nowadays you can get that exposure very cheaply with these ETFs, so that's probably the way I'd go.
People can be confident of the value of their money and the gold there. These places are insured. You know, have they got all of that kind of stuff? You're saying I care where the gold is, you know.
The chance of a gold vault being robbed are very low, I'd say. But
More likely for a bank to get robbed, I'm guessing.
yeah, I'd say so. And probably they're insured. I'm not sure about the insurance. Maybe I should have looked that up as well.
It should be insured because investment wine is insured. So
It's a bit different when it's like billions of pounds
And
worth
it's
of
in
gold.
the
Who's
vault, yeah.
insuring that, and what's the cost?
But I suspect if you had bulk quantities, then it wouldn't be, you know, the insurance wouldn't be that high. But you are the ultimate beneficiary of the of owner. You get the kind of legal ownership of the gold if you have the ETF. So I wouldn't be that worried about
Can
it.
you go there and demand it?
No.
Can you say, give me my gold?
No.
Oh. And if you've got gold in your house in a safe, or you've got some coins, where would you store that?
yeah,
Where do I keep my gold? Is that what you're saying, Darren?
Safe deposit box. Are you thinking more safe deposit box than you are?
It's
safe
funny
haven?
because I heard a story about someone that actually buried it in their garden, you know, which is difficult because what if you forget? Or what if you die and you don't tell your family, like my father didn't tell me, where the gold is hidden? You know, that could be a problem. And that's why we have hoards, right? You still find them today where people have buried their treasure.
Yeah.
You don't want to have that kind of hoard scenario.
I use that as an example of how, because one argument of gold is if society collapses, you've got your gold. And I use that as an example of a bad example of, well, it clearly didn't work. They buried it and something happened to them. They never came back. And someone said, yeah, but what about all the ones that did work and they did dig them up? And I was like, yeah, okay, fair enough. You know, maybe they just had a bad time, that one Roman family, but it's probably quite commonplace, wasn't it?
But look, if you're going to store it securely and don't tell people about it. Because if you do, then stories spread and then...
Just like your dad didn't, you know, your son didn't even trust you to tell you where the gold was. Yeah. Well, thank you so much again for your time, mate, and for coming on. That's your third episode now.
Hat trick.
We'll get you back. We're going to go all the way to 10 over the years, and we'll do a celebration.
Thank you so much.
No, it's our pleasure. So, T, how are you feeling about all your little decorations?
Well, my decorations are big. Yours is actually the little one. Little piddling.
I held that necklace, mate. It's got no weight to it.
You've got
We're going
no
to
weight
pass
to
around the
you.
room in a minute.
You've got no weight to you, mate. You've got no weight to you.
Well, if you want to go a little bit deeper with that, we mentioned in that episode Ed Conway's episode, which is one of my favourites, where we talk about his book Material World. You can watch that right here. Heavy hitting content.
I'm a material girl.
I'm so keeping it.
Yeah.
I knew you would do it. I'm like,
And the material, and the material. Lupin and the material.
you got to keep that.